The Indian government has passed a law that allows it to introduce charges on UPI payments in the future. It does not mean UPI charges start immediately. Instead, the law removes the previous rule that prevented banks and payment providers from charging fees on certain digital payment methods. What is likely to happen? The government may allow a merchant discount rate, MDR, on some UPI payments in the future. MDR is a small fee that businesses pay to process digital payments. Current discussions suggest it may apply only to merchant, business, payments, not person-to-person transfers. It may apply only to larger businesses or higher value transactions, for example, payments above 2,000 rupees, but nothing has been officially announced yet. Customers are not currently expected to be charged directly, although businesses could choose to include these costs in their pricing. Why is this being considered? Running the UPI network costs money. Banks and payment companies pay for payment processing, fraud prevention, cyber security, customer support, technology infrastructure. The government currently covers part of these costs, but as UPI usage has grown, there is debate about whether businesses that benefit from accepting digital payments should share more of the cost. What is still uncertain? Nothing has been finalized regarding when charges would begin, which businesses would be affected, the exact MDR percentage, whether there will be exemptions for small businesses, the transaction value threshold. The law simply gives the government the option to introduce charges later. What this means for business owners. If your business accepts UPI payments, this is something to monitor, not panic about. Small businesses. You may not be affected, especially if the government exempts smaller merchants. Continue accepting UPI as usual until official rules are announced. Medium and large businesses. You should prepare for the possibility of a small transaction fee on eligible UPI payments. Potential impacts include slight increase in payment processing costs, lower margins on high-value transactions, need to review pricing and payment policies. What business owners should plan now? 1. Track official announcements. The law only enables future charges. Wait for official notifications before making changes. 2. Understand your payment mix. Review total monthly UPI collections, average transaction value, percentage of sales through UPI. This helps estimate any future impact. 3. Calculate possible costs. Model different scenarios, such as 0.1%, 0.25%, 0.4%, 0.5%. This will show how much additional expense your business might face. 4. Review pricing strategy. Decide whether you would absorb the cost, improve operational efficiency to offset it, or adjust product pricing if necessary. 5. Diversify payment methods. Continue offering multiple payment options such as cards, net banking, and UPI so customers have flexibility. 6. Update financial planning. Include a possible payment processing expense in future budgets and profit forecasts. Key takeaway. The biggest point is, UPI is not becoming chargeable overnight. The government has only created the legal ability to introduce charges in the future. If charges are introduced, they are currently expected to apply mainly to merchants, especially larger businesses, and possibly only for higher value transactions, though the final rules have not yet been announced. Business owners should monitor official updates, estimate the potential financial impact, and be ready to adjust pricing or budgeting if required. The proposal is being opposed for several reasons, even though no actual fee has been announced yet. Most objections are about what the law could allow in the future. 1. It removes the legal guarantee of free UPI. Previously, the law prevented banks and payment providers from charging fees on certain digital payment methods. Now, that protection has been removed. Critics argue that this opens the door for future charges without needing another change in the law. 2. Businesses may end up paying more. If a merchant discount rate, (MDR) is introduced, businesses would have to pay a fee on eligible UPI transactions. Businesses with low profit margins may find this an additional cost. Many fear that even a small percentage fee can become significant for businesses processing large transaction volumes. 3. Consumers may indirectly bear the cost. Although MDR is charged to merchants, not customers, businesses could increase product prices, introduce minimum purchase amounts, or prefer other payment methods. In practice, some of the cost could eventually be passed on to consumers. 4. It could reduce UPI adoption. India's rapid UPI growth has been driven partly by it being simple and free. Critics worry that introducing charges, even for only some transactions, could reduce digital payment usage, encourage cash payments for larger purchases, or make businesses less enthusiastic about promoting UPI. 5. Small businesses worry about future expansion. Even if the first phase applies only to large merchants or high-value transactions, some fear the scope could gradually expand. Lower transaction thresholds could be introduced later, or smaller businesses could eventually be included. These concerns are about possible future policy decisions rather than announced plans. 6. Some believe there are other ways to fund UPI. Another argument is that UPI is public digital infrastructure that benefits the entire economy by reducing cash handling, improving tax compliance, increasing financial inclusion, and supporting digital commerce. Supporters of this view believe the government could continue funding the system through public finances instead of introducing merchant charges. Why some people support the proposal? Supporters make a different argument. Running UPI infrastructure costs thousands of crores each year. Banks and payment providers currently bear much of that cost. A modest MDR on large merchant transactions could help fund better infrastructure, fraud prevention, security improvements, innovation, and long-term sustainability. They also point out that credit and debit card payments already involve merchant fees, so charging large merchants for certain UPI transactions would align UPI with other payment systems. The core debate. At its heart, the debate is about who should pay to keep UPI running. Government-funded model. Tax revenue continues to support the system so UPI remains free for everyone. Merchant-funded model. Businesses accepting digital payments pay a small processing fee. Consumer-funded model. Businesses may pass some or all of those costs on through higher prices. The recent law does not decide which model will be used. It only gives the government the legal authority to introduce merchant charges in the future if it chooses.